Hello and welcome to the third episode of Sebastian's investment show. And today I want to go through my portfolio and how it's been going so far. I'm sorry for not uploading for quite a while because I've had quite a few exams. So in this episode I'll talk a little about how the companies are developing in my portfolio. I'll take you through different companies that has delivered and some of my thoughts about these companies and how I will continue to outperform the index through this investment strategy. The first company I will take a look at in this video is one of my many American stocks, which is Idexx Laboratories, which has negatively returned 9% since I bought my first shares in this company. But in this quarterly report, we could see that they delivered some strong results, such as they had first quarter revenue growth of 7%, which was organic. We can also see that they beat all their estimates, which is a really good point that will make sure that they will continue to outperform the market, because what I think drives outperformance is that they're able to beat expectation and deliver every quarter, such as they have done in the past. As you can see, this is how the company is delivering. This is the revenue and this is the earnings, and you can see that the company is expanding, it's taking market share, and therefore they're also growing both their revenues and earnings at incredible paces. Almost every quarter there is double low teens to a high single digits growth rate, which is incredible great. Even during like tough times like 2020 COVID times, they still continue to grow. That is why I believe this will be such a good company in the future. I also would like to highlight some of the high qualities that I look for in companies, such as Idexx Laboratories, which has incredible operating returns. One operating metric I look at a lot is the return on capital employed, because it's one of the best ways to see how the companies use their capital and to generate profit from it. I look at return on equity, and this is often very high on low capital intensive companies, because they don't really need to put a lot of money into factories and other stuff like that, which is also a great thing about the companies that I invest in. Because if we also take a look at Fortinet, which delivered good results also in their first quarter quarterly report of the year, we can see that they are continue to grow every single quarter, and every single quarter has incredible returns on capital employed, return on assets, and return on equity, which you can't see here because it's a negative. This is a bad example because it says a negative equity, but it's full of cash, so this is not a worry for me. You can also see this on Napco Securities, which keeps on growing every single quarter and has incredible metrics, far superior than the market. And that is also why I believe that these stocks will continue to outperform. If we take a look at Idexx Laboratories, it's one of the highest quality companies in the market. If we compare this to, for example, Nasdaq, you can see it's outperforming every single matter. If we take a look at from the start, the IPO, and in the last 10 years, and if they continue to grow and make better investments and make sure that they continue to grow on every single metric, I believe that they will continue to be far superior to the market. I would also like to go a bit through the Fortinet quarterly report, which was a really good highlight of why I'm invested into this company. Because this company is growing every single quarter with incredible margins and has incredible moat. The reason why they can continue to grow every single quarter is because they have incredible pricing power, because they deliver cybersecurity to companies that need it. And if we take a look at the free cash flow that is reported, we can see that they are continuing to growing every single quarter, and that is because they have pricing power. If we take a look at Fortinet market share over the cybersecurity, we can see that they are continuing to take the market share over the competitors. You also have like other crazy competitors such as Palo Alto Networks. Here you can see the largest competitors against Fortinet, which is no names such as CrowdStrike, Cloudflare, Scalar, and Palo Alto. But I believe that Fortinet is far superior because they continue to grow their profit margins every single year. You can see since 2013 they have grown their profit margins from 10% and to now 22%, which just shows they have pricing power and continue to deliver strong results quarter after quarter, such as you can see on this graph. It's an upward trajectory. This is also a reason why many believe that this is an amazing company, because me as well, because it continues to deliver year after year, and they are in a huge market which will continue to grow because of more investments into AI and everything, and it will be needing a lot more cybersecurity in companies and in public spaces and many other ways. So for that reason, I will continue to hold this stock, and I believe it's quite undervalued compared to other cybersecurity companies such as Palo Alto and CrowdStrike. So for the third and last company of this episode, I would like to talk a little about Napco Securities. Let me just find the Napco Securities here. Napco Securities here. It's my largest position now because it's delivered 20% since I bought into the company, which is $300. I have around $1,850 in this company, and this is because I believe it's such a great company. So as you can see, it increased its net sales for the quarter at 13%, and they also increased net income to 38%, which means that they're growing profit margins based on the revenue that they're growing. So this just shows that they have incredible pricing power, because I like to see companies that keeps having increasing their profit margins, such as you can see here. And it's also a reason why it's such a good company, because it can have a gross margin of 92%, which is far superior than other companies in Nasdaq and S&P 500. And the way that they are doing this is because they have a superior product than other companies, and they continue to deliver even during tough markets, such as you saw on the graph earlier. Here you see it's continuing to growing and expanding their profit margins, growing from 4.2% in profit margins and making $3 million per year in US dollars to now making $47 million and a 26% profit margins, which is incredible growth. And for that reason, I believe that every single metric is showing me that this is an incredible company. It's far superior than other companies, and it continues to grow every single year. and you can see analysts' forecasts are extremely good, which just shows that there's a huge potential in this company, and many do believe highly of this company. But I still see a lot of value in this company because it's still trading at 37 price per earnings, and if we look at forward PE, it's priced at 32%, 32 times future 1 year future earnings, and it also has incredible high price to sales ratio, but this is because it's such a high quality company and has an incredible gross margin profit, which is the reason why this is really high. But 37 is really good for a company that is growing at 30% per year and revenue at 14% and growing their gross margin every single year. So that was a bit about how my companies are developing in my portfolio. You can also see it's been my portfolio has been a bit stagnant for the last couple of the last month really. It has still outperformed the Idexx this year, and I'm really happy about it. And I also believe that if they continue, if the companies on my portfolio continue to grow, I will continue to show alpha in comparison to the Idexx, and for that reason I will continue to invest into these high quality companies which has incredible financial metrics such as the return on capital employed I talked about earlier, and also that they are really really good at continue to grow every single quarter even during tough times. I don't really like cyclical companies such as oil stocks and paper manufacturing companies and other stuff like that, because I like software, I like recurring revenues such as all these companies has, such as Idexx, Laborotories, Fortinet and Napco Securities. They're all based on the model that they will continue to get recurring revenue every single quarter and every single year, which will in turn make them able to grow and have extremely capital light business models. And for that reason I really love these type of companies, and I will continue to look forward and look at other companies such as Amazon and other high quality companies which I continue to outperform the markets. So yeah, thank everyone for watching the third episode of Sebastian's investment show, and please go ahead and press the like button if you like the video, and comment down below if you want to share some thoughts about either these stocks or some stocks that you want me to look at in the future. Yeah, thank you for listening, and thank you for tuning in. It really means a lot, and I'll see you very soon. Goodbye.